Welcome back to the channel. I'm Kale and I'm looking at a massive week of market action ahead. NVDA earnings are right around the corner and I expect the volatility to create some incredible structural setups across the board. My job isn't to guess the direction, it's to remain mechanical and execute my plan with absolute discipline. I'm going to start right where I always do with the weekly transparency check and account update. Accountability is the absolute foundation of everything I do here. I don't just talk about the wins, I'm going to be documenting the entire journey step by step. Right now, my core account balance is sitting at exactly $5,304.93. This number is my baseline of right about where I started last week as I execute my trading quest to reach $100,000 by next February, right as my leave comes to an end. Looking at my current allocation to hit that goal, the long-term side of my portfolio is firmly positioned in LEAPS options, specifically holding core positions in SNAP and QS. These give me leveraged long-term exposure to an eventual macro recovery without tying up all my liquid capital. Because I'm using LEAPS, it leaves me with the exact buying power I need to stay nimble and fund my active cash flow engine, which is day trading. I'm pulling up the charts right now to look at exactly where liquidity is sitting intraday as well as higher timeframes. I'm looking at the macro picture today by diving straight into the SPY and QQQ charts to map out the overall market. It's crucial to note that both indexes actually pulled back last Friday, dropping aggressively into the close. I'm tracking my institutional liquidity frameworks to see if that Friday flush was a genuine structural shift or just a massive liquidity trap designed to trap retail shorts before the smart money steps back in. On both the S&P 500 and NASDAQ ETFs, the market is really I think coiled up and tight and ready to move based off this catalyst next Wednesday. And I'm not trying to guess whether Friday's pullback continues or reverses. Instead, I'm just reacting to the frameworks. I'm hunting for clear liquidity pools and waiting for these key levels to get swept and looking for institutional displacement before I risk a single dollar of my capital. So I have the SPY pulled up. We can see here that we almost got a sweep of last week, like a complete sweep of the previous week high at 738.08. And if you zoom out, you can see that we have a large expanded range on the weekly. And if we are to put a fib set on here, a pullback, a 50% retracement from here would be 686.78. I'm not saying we're going to get there, but we're pretty overextended. So if I drop down to the 24-hour, you can see that we got a sell-off like I mentioned. Huge, big red day. I will be bullish on SPY and the indices until we get until we print a weekly bearish fair value gap. So same thing with the QQQ. We actually got a sweep of this one, of last week's high, 711.23. I am expecting us to tag the opposite end of that range. We shall see. Another huge expanded range. This would take us to 633.37 if we got that 50% discount retracement. Sell off on Friday just like SPY. Still bearish until we print a weekly bearish fair value gap. And I'm going to drop down to futures so you can see what's actually happening live and in real time. So for ES, we got actually a sweep of 2 weeks previous high at that key level 742.775. I'm going to see if we bounce at previous week low 736.325. We did print a bearish fair value gap on the 24-hour. Again, let's see if we bounce off previous week low to send us back to previous week high, and if big money is going to trap retail. For my active execution this week, NVDA earnings are going to act as the ultimate market driver, and I expect volatility to be through the roof. I'm using my available buying power to day trade high beta names like META and TSLA. My number one job this week is strict capital preservation. I am hunting for clean sweeps of external liquidity and clear structural shifts on the lower time frames. I refuse to get caught over leveraging into the midweek hype. I will wait for the data voids to clear, let the initial liquidity traps play out, and execute only when my mechanical plan gives me the green light. So I have Meta pulled up right now, the weekly chart. As you can see, we're still sitting sandwiched in between these two fair value gaps there. So we have the bullish one in green, the bearish one in red. And I still think that we get something like this. Oops, sorry. I still think we're sitting in discount on the weekly range, and previous month high is my draw on liquidity. I'll jump down to the 24-hour. I use that instead of the 1 hour because it includes all that pre and post market action. And you can see at that 618.88 level, Meta just keeps getting rejected. So smart money, big money, whatever you want to call it, they're not letting price move past that. So either it's extreme accumulation or extreme distribution. In either way, I'll just be playing those intraday moves. So I'm not going to be swinging anything, holding anything long term, especially next week with NVDA earnings. But this is a top mover for me. It really acts like an ATM machine. It moves quickly and gives me the volatility I need for day trading. Next, let's look at the Meta weekly chart. We got a huge rejection of the previous year close at that 499.72. So we are probably due this week for a discount retracement. Let me pull there. So we already started getting it on Friday because we got that pullback. But I think we see something like this. A pullback to about previous month high, that 408.57, before continue moved up. So I don't want to get trapped in that back and forth, people guessing what's happening for NVIDIA. I'm going to play it level to level. I just want to get you an idea of what I'm looking for. Wait for Meta and Tesla to finish their retracements, and then hop back in when the signal says so, which is liquidity sweeps of higher time frames or discount retracements. Coin, another one I'll be looking at. This one does move with Bitcoin, so 100% a day trade one. Looking for those 9 a.m. candle range setups for all three of these. And then let me go to the 24-hour. So I expect this. If we lose previous week low, then we definitely have, let's see, like this 183 level on deck. So I'll be looking for that. Further move down. And then lastly, XOM is still looking good. We are kind of busting through this bearish fair value gap on the weekly. If we break previous week high this week, I'll be looking for some day trades for that because it's basically still like a clear run back up to all-time highs at 176.41. And if this geopolitical news continues, I think is something that could prove to be worthwhile keeping my eye on. Drop down to 24, you can see that looks even juicier. So if we break this previous week high level, I do anticipate, we break this 159.23, I anticipate us getting up to that 166.24. For me, this is all about the raw, disciplined execution it takes to grow an asset base and achieve true financial sovereignty. I really appreciate everyone watching, tagging along on this ride, and leaving feedback in the comments below. Now, before I sign off today, a quick heads up. Over the next few days, you're going to see the channel name, the look, and the banner completely transition. I'm officially moving past that corporate Golden State Capital name and locking things down as Trading with Kale. The execution, the transparency, and the drive toward my 500 subscriber milestone stay exactly the same. We're just giving the journey the personal focus it deserves. So until next time, I'm staying mechanical. I'm protecting my capital this week, and I'll see everyone in the next video. Out.